Let's go to page. Let's do a combined question. Let's do a go to page now. We are now in examinable question now. What we are still doing so these days is child play. Let's go to question 24. Or series. Let's start with that. Let's go to question 24. Or series. Let's start with that. Let's go to the requirement of the question. The requirement says, prepare a computation and calculate current tasks. That is requirement A. Requirement B says, the B part of the question says.
Sorry, please. Question what, sir?
Can you see my screen?
Question 24.
Yeah, your screen is showing whiteboard. Yeah.
Okay. Question 24. Question 24. Ostrich.
Okay, sir.
Ostrich. The first one is saying we should calculate, prepare the tax computation for current tax expense, calculate the deferred tax liability as at 31st December 2017. Prepare a note showing the movement of tax expense for the year. Okay. Know that income tax is 30%. Good. In exam, I will list all the three requirements. A, say computation of tax expense for the year ended. For the year ended 31st. Any issue? As well, December 2017. For me to calculate current tax, there must be accounting profits. That is the requirement A of the question. Requirement B, deferred tax provision at the end of the year B. That means I need to know my items, the carrying amount, then the tax base, carrying amount, tax base, then I have my temporary difference, tax rate, then I will have my deferred tax liability, DTL or DTA, requirement 2. Then requirement 3, component of tax expense. The component of tax expense, note to show the component of tax expense. Okay. The component of tax expense, which is the C part of the question. C, component of tax expense is addition of the current tax. Sometimes they say income tax expense, same thing, and the deferred tax. That is it. This is the 3 requirements. In exam of this nature, they give you to calculate current tax, deferred tax, I always advise my students to do everything simultaneously, not to waste your time. Starting from the deferred tax table. So for me to prepare current tax, don't forget, we need accounting profit. So I'll now go to the question. Let's start reading. Horse Race Nigeria Limited has an accounting profit before tax of 225 million. And he leaves, okay, he leaves the account in 1,000. The financial statement was in 1,000.
Okay.
So I'll now say accounting profits. Which is 225. This is it. Accounting profits, this. Don't forget the rules. I'll add back these allowable expenses, less allowable expenses, and less not taxable revenue. So he has given a started financial statement. I'll now go to the notes. The carrying amount of the non-current asset is given. So let me see the notes. He has given the carrying amount of the non-current asset, building. Okay, let's see. 1, building was acquired by the company at a cost of 175. Oh, it's not giving me building. Building. Only it was acquired. I'm coming. It was acquired at a cost of 175 million. And because of 175 million, at the start of the year, and the policy of companies to depreciate building 10% on a straight line basis. So straight line basis, 10%. Therefore, I can get the carry amount, which the question has also given me in the financial statement already. There's no issue. He has given me the financial statement, but I can still get it done. I will now go to the question. You say, okay, no problem. Let me share another board for working. Okay. Let's use this one for the working. Don't forget, you are not to write. You are not to write. Your one is just to listen and you can be jotting as like. So he has given me the cost of the assets.
Mr. Kazim, sorry, what question are you looking at?
That device. Page 24, question 24, question 24.
Okay, sir.
Question 24. Question 24. So I will go to the question, okay, building. Cost is 175 million. We leave it in thousands. So it's a depreciation rate has been given. How much depreciation rate? 10%. 0.1 times 1750. That will give me depreciation. That will be subtracted from the cost of the assets. So this will give me 17,500. So 17,500 minus 75 million minus 7,500, what does it give us? That will give us 57,500. Is that clear? That will give us what? 57.
157,500.
Which the question has said the building has a carrying amount of 157, 157,500 has told me already. Then what this is for what? Accountant carrying amount. How did they say I should determine the tax base? They say the company tax consultant have stated that the company can claim 105 capital allowance on this year on the building. Okay? So to determine the tax base now, what is the cost? because it's 175,000. Then they tell me that capital allowance that can be claimed according to our tax consultant, which is an expert in this regard. He said you will claim 105. So what will not be the tax base? $175,000 minus 105. Somebody help me, please.
70,000.
70,000 is the tax base. So I'll just go back to my question. I have gotten on the building. We just say building. The carrying amount 157,500. That's base 70,000. Has it created a temporary difference? Yes. But I can quickly come here to do the, like I say, depreciation. What do I do to do depreciation on building? I will do what? Add back 17,500. Then capital allowance. I'll be doing everything simultaneously. Capital allowance on building. Allowable expenses 105. Lower come. Has it created a temporary difference? Yes. 157,500 minus 70,000.
87,500.
87,500. Don't forget, he has given 87,500. He has given tax rate to be 30%. Is it a deferred tax liability or deferred tax asset? When the carry amount of an item is greater than the tax base, it's a deferred tax
liability.
Liability of how much now?
26,250.
26,250. That's all. Yeah. Ask me question. Ask me question. Before I proceed, question 24. Ask me question. Let me put it to 50%. This is it. You just open the requirement, open everything down. You will not be reading. The table will give you the clue on what you want. As you read, you pause so that you earn your mark immediately. Any issue?
Now, what did you write as the heading? What's the heading there?
The name of the question, horse race. Question 24.
Okay, horse race.
Question 24. Okay, immediately that is done. Immediately that is done, I will go to the next one. Or continue the same line. It's only one people that did the assignment or two. People don't used to do an assignment. So we'll start giving assignment from now on. The balance in respect of the plant and
Say we should submit on Thursday.
Not true. The balance in respect of plant and machinery are after depreciation provided in accounting depreciation. The balance in respect of plant and machinery are after providing for accounting depreciation of 30 million and capital allowance claimable on it is 25 million. Oh, he's talking about plant and machinery. So plants and machinery. He said the carry amount there, which is 250. It's either he has provided for depreciation of, don't forget, I'll just go and get my tax base. He said It means the cost of the plant and machinery, let's see, plant and machinery. That means the cost initially of the plant and machinery. How much is the cost of the plant and machinery? He said in the book we have 250,000 plus the 30,000 depreciation charge for the year to give you 280. So he now remove depreciation of 30,000. That is why he's getting 250,000. Say the balance. 250,000. But the capital allowance that can be claimed is for the tax base now. Cost is 280. Then it's a capital allowance that can be claimed. He has given the capital allowance that we claimed to be what?
25
25.
million.
25. 25. 2 minus 25.
255.
255,000. I will now take 255,000. Tax base is 255,000. That means there's a temporary difference of 5,000. Tax rate is 30%. I will check. Is it deferred tax liability or deferred tax assets?
Assets.
Asset of how much now? 30% of 5,000.
15.
Yes, 15.
Don't forget, I will not say depreciation in my current tax is a disallowable expenses which will be added back. Depreciation on what?
Plant and machinery.
I will not say depreciation. Just simple. Depreciation on plant and machinery. Which is 30,000 will be added back. Don't forget the capital allowance. On plant and machinery is a liable deduction. What do I do? 25,000. Is it 25,000? 25,500. Let's see.
25,000.
Is it 25,000? I'm not sure. Okay, 25,000. Thank you. That is it. That is it. After that, information 3. Asset under finance list. Don't forget last week. I say anytime you see lease in the question, calculation of current tax. If you still remember, if you open your book, that's what you have listed when we are doing current tax. Lease assets. 3 things. Depreciation on lease. What do we do to depreciation on lease?
You had back.
You add back. Don't forget. Then I say finance costs. What do we do to the finance costs on lease?
You had back.
Sure. Then I said the lease renter. The lease renter paid. How much? What do we do to the lease renter?
Relax.
That's all on current tax. That is the question will give all the three. Let's see what does the question says on the list. I'm here on this slide. The list, the asset under finance list was acquired during the year.
The asset held
Does not distinguish between finance list and operating list. A rental expenses on the list is deductible. Don't need to tell us, we know. The depreciation policy on the list is 20% per annum, where annual finance charge is 366 million, 3.66. I can do that first. Finance costs, the interest on the list, which is 36667.66, so it's million 367. Then I can go and calculate the depreciation. What about the lease rental paid? I will check. The lease rental is, the annual lease rental is 72 million. Lease rental. What do I do to the lease rental? I will subtract. Then I will now go to get depreciation on the lease. I need to get depreciation on the lease. Depreciation on lease assets. Don't forget what I'll go to the non-current asset. What is the value of the lease? Right of use of an asset. 200,000. Lease assets is 200,000 times what is the percentage we charge on the lease? 20%.
20%.
200,000 times 0.2.
40,000.
So what do I do to the 40,000? What do I do to the 40,000?
You had.
That's all. Add it back. I will indicate for them depreciation on lease assets. That's all. I will now go to my dividends table. I will match it on dividends table. Or say lease assets. What is the asset on the list? It is 200,000. I'll go and say, what are the obligations under the lease asset? Finance lease obligation is 216. So I'll go and match it to get the carrying amount. According to the question, the lease assets determination of the carrying amounts of lease assets. Lease assets is 200,000. I'll go to the non-current liability. What is the lease obligation? The lease obligation, according to the question, is 216. So that means obligation you are going to pay 16,000. So I'll go back to my table. Lease 16,000. Jackets. Then the tax base will be they've given you rental payments. They've given you rental payments. Some textbook, they split it. They first of all do 200 asset obligation. Now the same as I was, you're just wasting your time. Any question, ask me before I proceed.
Sir, the 216 obligation, where is it coming from?
Where do we see liability go down in the question? You will see the two ones. You match them, the lease asset against the lease obligation. Yeah. Go there. Have you seen it?
Not yet, sir.
Check the question. It's there.
Yeah.
Go to the
Okay, yes. I've seen this. Yes. Thank you, sir.
final lease obligation. You match it. Match the concept. Has it created a temporary difference? Yes. 16,000.
Can you explain why the tax base is new?
They've given the lease renter. She want to collect twice in it. You have used your lease renter in your POA. You don't anything you pay for rent, we give you. They don't have the record of the lease assets. Okay, you acquire this asset on lease. Okay, good. Are you paying lease renter? Okay. Any amount you pay in your lease renter, use it against the PO, your POL. Reduce it to reduce your liability. So that is the for the lease. So they don't have any record of the lease.
Sir, please, I missed you at some point. This depreciation on what are they calling it, on lease assets, and how you got the 200,000 naira. I think I missed that.
Go to the question. You will see under lease asset, you have 200,000. Then they said the percentage in note 3, the asset under finance lease was acquired during the year. The relevant tax law does not distinguish between finance lease and operating lease. Rental expenses for lease is deductible. You don't need to tell me that. That is the law. They will give you the rental payments. How much you are paying on the rent every year. So, the last depreciation policy for the lease asset is 20% per annum. 20% of 200,000, that will give us 40,000 naira. What do we do to depreciation on lease? We add back. Then the finance cost, we also add back. Then the lease rental we subtract. So I will now go to the question to go and get what is the legal obligation. If you go to the payables, you will see fines. You will see finance lease obligation. Under finance lease obligation, you have 2116. 2116, you remove the 200, the asset. You still remain a liability of 16. Liability of 16 will not be the carrying amount based on the matching concept. Then the tax base will be need. Why? Because they have given you lease rental. They say, okay, don't worry, any amount you pay on rent for the lease, you have given you. So they will not grant you capital allowance on it again. Don't forget, anytime you see lease, remember those three things. Depreciation, you add back. Finance costs, you add back. Lease rental, you subtract. In where? Computation of current tax. But in the deferred tax table, you margin, the tax base will be need. Any other question?
No, sir. Thank you.
About to start in Lale, we have a lot to do this night. And we are going to end
Alright.
this night. Who say, so I can see. Who say, what is the carry amount of the building? I say, 157,500. Who put her there? Say, now the question, who asked the question? That kind of question you asked me last week. Next, trade receivable. Note 4. Trade receivable figure.
Sir, we are yet to complete the lease asset.
Okay, thank you, my sister. Is it a different tax liability or different tax asset?
Assets.
Asset, because zero is guaranteed. How much is the
Yes, sir.
asset now?
48.
48. Then I will go to the next one. Trade receivable. Trade receivable. What is the carry amount has been given in the financial statements? The carry amount for the trade receivable has been given. Trade receivable. So, what was the question, Cindy? Trade receivable is shown at a net of allowance of doubtful debts of 70 million. This is the first year sure allowance has been recognized. Deduction for debt is only allowed for transferable when the debtors enters liquidation. So, what is the current amount of trade receivable?
182,500.
The closing balance of our trade receivable is 182,500. But the opening balance, we don't know. But they say they've removed provision for bad debts of 17 to get this. Who can now tell me the opening balance? Who can now tell me the opening balance?
165,500.
Yeah, observe it.
199,500.
Yes.
199,500.
199,500.
199,500. That is it. Because they say the one you are seeing in financial statements is the net. So 182,500, 199,500. So what is going to be the carry amount? 182,500. Who can tell me the tax base? Who can tell me the tax base now? Trade receivable. 182,500. What is going to be the tax base?
199,500.
How do you know it's 199,500?
So they said, I think what the question says that the deduction for
That's
allowed for tax purposes when the company liquidates, and there is no place showing that the
provision for
company.
that debt.
I disagree.
The tax person doesn't have businesses or provisions.
I disagree. I disagree. I have given you measurement principle to determine the tax base. I say principle 4, application of accounting principles together with the tax knowledge in determining the tax base. Provision for bad debt is not recognized by tax person. That is it. Because
And that was
provision.
what we said.
Is that what you said?
Yes,
See what
sir.
you did not measure principle at all. Measurement principle. What do I do to my current tax? Provision for bad debt. So disallowable.
God.
You add back.
Lower come, I will add back. I will add back. Well, add back. Next. Next. Interest income is tax and interest expense is allowable both on cash basis. And there were no opening balance of interest receivable or interest payable. So I will go to the question. Interest receivable on cash basis. Interest receivable. How much is the figure for the interest receivable?
25.
25.
What is going to be the tax base?
0.
Because it's on cash basis, 0. Has it created a temporary difference? Yes. Is it a deferred tax liability or deferred tax assets?
Liability.
Liability of how much now? So we are
750.
30% of this.
750.
How much? 750.
Yes, sir.
For this one, trade receivable, 30% of 17,000.
51.
Is it a deferred tax liability or deferred tax asset?
Deferred tax asset.
Asset of 51. That is it. Then he said interest payable, but there is fines before interest payable. Let's do the fines. But before we go on, interest receivable of 25 is on cash basis. Listen very well here. It's on cash basis. Which effect does it have on the current tax? It's on cash basis. He said the money 25. Has it been collected? Say no. Why do you add it to your POL as part of your accounting profits? He said, why? Because accountants will now talk. We prepare accounts based on Accura basis of accounting. Accura. We prepare the account on Accura basis, not on cash basis. Accura, that means, even though the money, physical money has not come in, revenue has been earned. As in, money has not come in, you have recorded it. The tax will say, are you mad or something? Money has not come in and you have put it as part of your income. Why? When you have not seen the physical cash of the money. So yes, the person is promised to pay, we will credit our revenue and we'll make our debit our receivable. We are going to collect interest receivable. So when he pays, I will remove it from receivable by crediting, then debit my bank. I say, the tax man say, they cannot comprehend. It's on cash basis. No. When you collect the money, we will tax you. Remove it. They will now instruct them to remove the interest receivable.
Lessons.
So when you collect the money, I will tax you of 25. Remove it now. So we have fines under payable, we have fines. Is there any information on the fines?
Yes.
Provision for fines and penalty are not tax deductible for tax purpose. I will come here. What is the figure for the fines?
25,000.
25,000. What is the carrying amount? 25,000. What is the tax base? What is the tax base?
0,
Huh?
0.
They play. Who tell you say 0? Should I tell you say 0?
25,000.
Huh?
25,000.
Why do you say it's 25,000?
Because fines are not they are not how am I gonna explain? The tax person does not allow this thing to be deducted, fines to be deducted.
If
It's
an
I
not
do
an
not need that
allowable
explanation.
does not have tax consequence or is not deductible for tax
Somebody
purpose.
is talking. For this
Sorry?
kind of question, identify temporary difference. I have given you measurement principles. It's those four that key this one. It's those four. Measurement 3 says if an item in a financial statement is not deductible for tax purpose or it does not have tax consequence, the carrying amount equals to the tax base. Simple. Not, it's a measurement for identifying temporary difference. It's just only 4 measurements. If an item is taxed on cash basis, 1, the tax base will equal to 0. If an amount has been used in arriving at the taxable profit, the carry amount equals to the tax base. Then the application of accounting principles together with the tax knowledge. That's 4. It will give anytime they bring this kind of question. Straight, you are home and dry. You are home and dry. I will now go to the question. Fines. Does not have tax consequence. I will add back.
Why are they in jackets?
Add back. You does have tax consequence, but it will not create a temporary difference because it's a permanent difference. That's what he's trying to tell you. It's not deductible for tax purpose. I went back, then go to the, it will not create a temporary difference again. Go to the table when I was starting the class. I said all permanent difference will do what? We say disallowable expenses, and don't forget disallowable expenses will be added back to current tax. That's what I said. And no be me talking. That is what the IAS 12 says. Somebody asked why is it in jackets. Fine is a liability. Money is going out of the pocket. So it's a liability. No story for that. The last one, interest payable. How much is the interest payable?
8,250.
It's on cash basis. So the tax base. Has it created a temporary difference? What is the tax rate? Is it a deferred tax liability or deferred tax asset?
As
Is it a deferred tax liability or deferred tax asset?
Liability.
Or tax rate?
2475.
2475. An asset, 2475. That's all. I am done. I will now sum my asset against the liability to know that is the second requirement, to know the deferred tax at the end. I will just remove.
A question, sir.
What is the question?
Why is it that in the current tax we are not including the trade receivables and the trade payables there?
Thank you, my brother. Those were sides. I'll go to the current task. Trade receivable, trade receivable, trade payable, interest receivable, interest payable. Is that what you see? What you
Trade,
say?
not receivables, trade receivables and trade payables.
Does it affect POL?
No,
Does
it
it
doesn't
affect POL? Does trade receivable and trade payable affect POL?
No.
As an accountant, trade receivable, those who are weighing us, they've not paid. We will have credit our revenue, they make a provision for it. So it must have a part of the accounting profits, the amount of the sales. So it does not make any effect here. Is the provision for it that is the problem? Interest payable. What do I do? It's on cash basis. We have not paid the money, but we have not paid the physical cash, and it has been deducted here. What do I do back? I will add. That's all. This is going to give my taxable profit. Then the tax rate. Can help us with the taxable profits. You can help us with the figure. You can help us with the figure. Is there anybody with book calculator?
$194,917. Please confirm.
Confirm, we confirm.
194,917.
194. 194. 917. They multiply by 30%.
58,475.1.
Current tax. 58. 47.
5.1.
As well. Then my deferred tax. What is the deferred tax?
So are these fines?
Mm-hmm.
Are we
What
supposed
happened?
to have a taxable difference?
Huh? What do you say? I'm
Yeah.
with you.
No, I was asking if I'm not supposed to have a taxable difference.
What do you say to fines? What does the question say? What does the question say to fines?
I'm coming, please. What that was going to do. Provision for fines and penalties are not allowable deduction for tax purposes. The fines payables is a provision made during the year.
And they say they are not allowable deduction for tax purpose. So what will not be the carrying amount? What will not be the tax base? After I've given you measurement principles to follow. Have I not given you measurement principles to follow?
You have. Is equal to the tax base, yes.
So why you see asking me why is it 25,000?
No, I said that will there not be a taxable difference? That was what I asked.
It
It will
cannot
end
be a
up with
taxable
zero.
difference now. This will be zero now. 25 minus 25. Is anyone greater than each other? 25 minus
Minus. Don't mind me.
is zero. This one will give me zero now.
That's noted, sir. Thank you.
Eh?
I said, well noted. Thank you.
Oh yeah, give me figure.
The deferred tax
27,000.
How many?
Deferred tax liability, 27,000.
Okay. Asset income.
13,875.
3875. $13,875. Why this one will not give us 27,000? I'll now say my deferred tax. Balance. As at 31st December 2017. Deferred tax assets. Deferred tax liability 27,000.
So that asset is 13,075. That's it.
Oh,
Not,
it's
good.
Which one is correct?
The one you have there is correct.
875 is correct. The prison put this.
I'll remove the 1375. Deferred tax balance at the end. 27 minus 8.
13,125.
Huh?
13,125.
13.
125.
That's it. So that is the requirement B. Requirement C. Requirement C now. Tax component. What is the current tax? It was 75.1. 8475.1. 8475.1. 8584.75.1. Then deferred tax. I'll show the movement. Movement in deferred tax. Opening balance. Closing. balance. Did not give me opening balance. 0 in the question. What do we close with?
13,125.
13,125. Charge.
13,125.
What else charge?
Oh,
13,125.
okay.
That's all.
Oh.
I will sum it together. 58,475.
What do you mean?
71,600.1.
71,600.
600.1.
That's all. That is all. Go to page. Go to question 11. This is a combination of everything. The question we always ask you for. This is a combination of everything. So always remember they can ask you for
I've made that too.
any question. Any question? In the absence of no question, go to question 11. Question 11. Go to question 11. Lydia,
Yes, sir.
can you help me with the requirements?
Required. Calculate the taxable profits for the period and current tax expense for the year.
That is the first one. It means you calculate taxable profits and the current tax. Mhm.
B. Calculate the timing difference for the year.
It says you calculate what is timing difference, temporary difference. You also calculate the timing difference. Mhm.
C. Calculate the deferred tax expense or income tax expense for the year.
Deferred tax expense, income tax expense.
D. Calculate the tax expense or income tax expense for the year.
Yes. Deferred tax expense or income. That's what it's trying to say. Mhm. So that they will give you all the four. The way is just the same thing we have been doing. The only difference is that they add some, which you will see. And I send this kind of question to the platform. You would do as if you do not see it.
The one you sent today.
Just now.
We've not, we received it at work now, Mr. Kazim. We'll work on it.
No problem.
Yes, sir. Very good. Very good. Okay.
So with that, I will also open everything. I will open it, all the requirements. I will just open. Then I'll start following it up. Simultaneously, I'll be posting everything. Okay, let's start. Let me send this.
That's it.
So on your platform now, what we did now, so you can get your solution on the platform. Okay. Now let me open. Yeah, the requirements now. What is the name of the question? Prospects. You know, you have prospect to pass. Also, the first requirement of the questions was saying calculate the taxable profits and the current tax. I will now say computation of taxable profits and the current tax. For the year ended, which year ended? 31st December 2019. 2019. Don't forget, there was the accounting profit, which the question has given to me to be 870. Accounting profit, 870. Good. That is the first requirement. I'll go to the next requirement. What's the next requirement?
Tax expense. Okay. Temporary difference.
I'll just say, okay, using my Divatas table, I'll get that. I will list my item. I'll say items. Carrying amount. That's base. Temporary difference.
Tax rate.
Tax rate. So, deferred tax liability. Deferred tax assets. That is the second requirement. Third requirement. So I should calculate what?
Deferred tax expense
Or income.
for the year.
So, convert indiffer tax to POL. Bracket opening balance. Then the closing balance. Lastly, calculate the tax expense. For the tax expense, total tax expense. Current tax and deferred tax. That's all. I will now go to the question I'm reading. I've opened everything. You know, my sister, you know how we used to open everything now.
Yes, sir.
Open it wide.
How wide you open it?
It depends on you, not me. Next, I'll just go to the question. Fines and penalty of 120 incurred during the year. Fines and penalty of 120,000. You go there. Fines and penalties. They've given me the carrying amount of fine as penalty. 120. What is going to be the tax base?
120.
How do you know it's 120?
It's fine.
Measurement,
Huh?
Not tax deductible.
measurement principle, the third one that stated that if an item in the financial statements does not have tax consequence.
Does it say it does not have tax consequence? Does it tell you it does not have tax consequence?
It does not.
Yes. Oh no, it didn't say anything whether it's not deductible or not.
Why do you not say it's 120? But
Okay,
I
what is
know.
the first measurement principle now? Application of no worries, sir. I wanted to use the fourth principle.
So how can we use four principles here?
This one.
Is the four that apply? One of them is apply. Look at it. What does the second one say?
If an item in the financial statement has already been used in arriving at taxable profit.
It's already been used in arriving at taxable profit. Is the four principles. For this one, they will just say fines and penalty. They will just say, they will not tell you any position. Are you going to make use of it in the P or L? If yes, the tax base. If it has already been used in arriving at the taxable profit, I'll just go, okay, what is going to be the tax base? No temporary difference. Next, not taxable income of 150 ends during the year, but not yet received, not taxable. What do we do to the current tax? It is not taxable.
We have
Eh? Not taxable.
Less.
we less non-taxable income.
When I've given you the formula, current tax, accounting profit, add back disallowable expenses, add
Less
less
non-taxable.
allowable expenses, less not taxable revenue. Not taxable. Because you are suffered tax. Slash income. How much is the figure?
150,000.
And yeah, you want to sleep. You cannot sleep. There's no rest for the weekend, not only the weekend. Including ICAN students. Not taxable. $150. What is going to be the tax base?
Nothing. 0.
How is it 0? How is it 0? Damn. How is it 0?
Because it's not taxable.
It will be 150.
150 going. Somebody will say 200.
Money but not yet received.
That person is stupid.
Huh?
For him to say 200, he's sleeping already.
Where do you say 200 here again?
And he said someone will say
Don't
200.
cash
I said
basis.
the person must have been sleeping.
Okay.
1,000.
Oh, yeah. Does measurement...
He said that the measurement
The money
states
has
that
not been received yet.
the measurement states the third measurement states that
It's 150. It's 150.
the tax consequence
150? How do you say 150?
following the third measurement.
What does the
Zero.
third measurement say?
Zero.
Yes, the third one. It says if an item in the
Somebody
financial
has,
statement
wait,
does
somebody
not-
has said something now. What do you say? Somebody said something now.
The tax base is 0
How is it 0, my brother?
because the income is not yet received.
Go with time. God will bless you. May your blessing never cease.
Well,
May your
Amen.
blessing never cease.
okay,
The
what
question
about
is, Igboho not yet received, cash basis. This money is not yet collected, cash basis. You are not saying measurement 2, measurement 4, which measurement 4?
Measurement 5.
You said the money is not yet collected, cash basis. It's not yet paid. It's not, all those things are cash basis. As we go to Mr. Kasim never teach us this one, for example. He not teach me also. You go this one for Mr. Kasim. Where in the you know go better for him now. You go better for me. I teach you. It is 0. It's on cash basis. The money is yet to be received. It's yet to be received. 150. Did they give me tax rate?
Yes, 30%.
30%. You see a different tax liability or different tax assets?
Liability.
Deferred tax liability,
Liability of how much now?
45,000.
45,000.
Next. You better
Depreciation.
have another charge on the non-current asset. 200. Okay. What is the capital allowance? I will solve that here. No, let us open another thing. Let me see where there's space. Okay. What is the non-current asset? If you go down, they not give us non-current asset. We acquired
1.3.
1.3.
So I have two options. They give me capital allowance that they granted on
Yes.
260.
Yeah.
So I can say the carrying amount now.
1.3.
1.3 minus the depreciation.
Sure.
How much is depreciation?
200,000.
200.
200.
So what does it give us now? 1,000.
1.1.
1.1, okay. The tax base. How much is the tax
1.3.
base? 1.3.
1.3 minus 260.
What does it give us?
1,040,000.
That's all. He has created a temporary difference. How much is the temporary difference?
40,000.
40,000.
I saw it was 60,000.
60,000.
I can use this. I can, don't forget depreciation. What do? We add back.
We add back.
Capital allowance, what do? We less.
Less.
I can also use depreciation. I can say items. Carrying amounts. I say carrying amounts. Depreciation.
200.
Capital allowance.
Temporary difference. Tax
rate.
How much is depreciation?
200.
200.
264.
It will say give me the same result. In case I not give you the non-current asset, it doesn't matter. You use it 60,000 direct. It will still get you the same thing. So you know it's a charge. You interpret. It will increase my liability because the insurance is less than the capital allowance. Oh, way now way. So I've got a non-current assets. See, default as liability or default as assets.
Liability.
Liability of how much now?
18,000.
18,000?
Yes, sir.
Yes.
Interesting.
We have not done depreciation and capital allowance.
Yes.
And current assets. Or say depreciation. Or not current assets. How much is depreciation charge? 200.
200.
No current. Nice.
Interesting.
What is our interest payable? Interest income. How much is the interest income?
It's 30,000.
40,000.
Yo.
30,000.
30,000.
What is the tax base?
0.
$8,000 times 12. See a default tax liability or default tax asset.
1,000.
Liability.
Eh?
Liability.
How much?
9,000.
9,000.
The next one, cost. What do we do to the interest in the column? I'll go to my current asset. Interest income.
Yes.
How much is the interest income?
30,000.
30,000.
What do I do here?
You less it.
When you collect the money, I will tax it. When you collect the money, I will tax it. Next.
Interest cost.
Interest cost. I've not had that before. It's 3 nights. Is it part of this class? Interest costs. What you lose? 40,000. Next. What is the tax base?
Zero.
Don't forget the cost, liability. Is it a deferred tax liability or deferred tax asset?
Asset.
Assets.
Asset of how much?
12,000.
12,000. No more.
Yes, sir.
That's all. I will sum them. I will sum everything. This will give me 12,000.
Yeah.
72,000.
22,000.
Deferred tax at the end now. Deferred tax balance.
2,000.
2,000.
That's at which are we preparing? 31st December.
2019.
We have an deferred tax liability of 72. Then the assets.
Well,
Of how much?
12,000. 60.
Go to the question. Close the balance. We close with 60. What did we open with? Did they give me any deferred tax at the beginning? No.
No, sir.
That's expense. Rent as local. Rent as. I'll go. This will give me taxable profit. Then tax rate. 40%. Foreign tax.
Commented.
New figure. Ah.
750,000. I don't know.
750,000.
750.
Yes.
Yes, please. Two, 225.
225.
Are you sure?
Yes.
Yes.
They are not following. We do not adjust for interest costs.
Mhm.
It's only income we adjust for. We do not see that interest cost of 40,000. Where does it come here? You do not see. Is it not a cash basis?
Yes.
So why you do not remember me?
Yes, what's that? But
Okay, forgot.
Yes. You are supposed to add back. Because it's on cash basis.
mhm.
Are you getting the concept behind these difference?
Yeah, no.
So if it's not cash based, we will not have back.
Actually, sir.
Somebody says if it is not cash basis, what do we do? The question will tell us the category falls inside the four now. How do we determine the tax base? I have given you measurement principles. Is that measurement principles you will follow? So let's cost. Now, can I get my taxable profits? And before I can apply the tax rate to get my current tax.
790,000.
Huh?
790.
Are you sure?
Yes, sir.
790,000.
So taxable profit. Tax rate.
30%. Current tax 237,000.
37.
Mm.
You give me what? Taxable
Current tax.
current tax. Thank you. That's all. One minute. Current tax 237. 2,000 plus 60,000.
297.
297,000.
As it. That is that. Any issue?
Please, can you explain how you got the fine and penalty tax base?
Measurement principle. Measurement principles. Measure principles 2 was used. Why? Because it does not tell us any other thing. Just, are we going to use the fine in arriving at the taxable profit? Say yes. Measurement 2. Say if an item in the financial statement, we use the arriving at the taxable profit. Carry amounting cost to the tax base. Next. Should we do one of these type or we should move to
Let's see, do one of this type.
one of these type?
Yes, sir.
Who is in support?
So one of this type or
Okay, go to question 16. Question 16.
Sir,
Uh-huh.
sorry, before we proceed,
Mhm.
the ones that usually have the revaluation of assets, is it not
I did not
going
hear
to put
you.
it here?
I did not hear you again.
So I said the ones that usually have revaluation of assets, are we not going to treat it under this one?
Mhm. What do we do? Because you must get the logic, man. It's very simple. No one will revalue assets. Where does it go? But remember, when we revalue assets, in line with IAS 16, it go to the OCI.
John.
So it does not affect the POL, the OCI. Right? You will see it in the next question now. Yes, I think question
Okay,
16
sir.
has evaluation. Let me see. Go to question 16. ABC Limited. He has revaluation. Revaluation surplus or deficit will be reported where in the OCI, other comprehensive income. Don't forget the profit we pick is accounting profit, profit before tax. So it's everything that comes before profit before tax is our issue. Anything under it, we will not do anything to it. I don't know whether you understand what I'm saying.
Can you repeat that, sir?
Repeat it again. We don't understand.
Okay.
When they revalue an asset, it go to the OCI. But the profit I have picked, profit before tax, accounting profits, it's like profit before tax. It's profit before tax. Not even like it's profit before tax. Because tax has not been deducted. So what is my own duty in exam? Revaluation surplus go to the OCI. It does not affect my current tax computation. Why? Because I pick profit before tax. Everything that comes before profit before tax is my problem, not after it. That is the reason which we are going to see in this question now. Let's read the requirements. Identify the tax base and the temporary difference for each of the items given. Calculate the current tax for the year ended as 2016. Calculate the deferred tax provision required as at 2016. Calculate the income tax expense. I'll open everything. ABC. Say first, identify the temporary difference for each deferred tax table. We solve that problem. That is a items carrying amount. The one I sent to the platform now, you can do it. Temporary difference. That's it. Deferred tax liability. Deferred tax assets. That's all. That is it for the A part. For the B part, foreign tax. For the year ended, at the 1st December,
2016.
there must be accounting profits. Yes. What is the next requirement?
Deferred tax provision.
What tax provision required? As at
31st November.
which should be correct. Deferred tax liability. Deferred tax. Then DD. Income tax expense. Income tax expense. That's all. That is all. That is all. We'll now start. Here's the question. Yeah. Non-current asset. Assets subject to investment relief. Assets subject to investment relief. Carrying amount is 63,000. No tax base. I'll go and look. Information 1. What does it say? Oh, yeah. Asset cost ABC 70 million. Let's open this one, please. Let's open another. Assets subjects to investment relief. Additional information 1 now. Cost of the assets 70,000.
70,000.
What is the depreciation on it?
10% off.
0.137. You cannot sleep. Oh, nobody has sleep that place. The way my
7,000.
The way my spirit will speak to that
7,000.
person. You
63,000.
want to sleep. Me, I did not sleep. You want to sleep. God will not give you sleep
Wow.
until we finish.
Hmm.
So that is why they have the carry amount of 63. I know what to do to the depreciation.
You add back.
Yes. I'll now go to the tax base. Is there any clue on the tax base? Yes. What is the clue they ask me on the tax base? ABC tax consultant has advised 42 can be claimed as a taxable expense in the year the tax computation. 42 can be paid. What is the cost of the assets?
20,000. Capital allowance.
The allowance,
42,000.
what is the
28,000.
28,000.
$28,000?
Mm.
63 minus 28. What is the tax rate? You don't give us. Applicable tax
Yes,
rate, 30%.
30%.
63 minus
35,000.
35,000.
is it deferred tax liability or deferred tax asset?
Yeah. Liability.
Liability of how much?
10,500.
10,500.
10,500. But don't forget the depreciation of 7,000. You don't give me accounting profit.
Yes, 350,000.
Where do you see that one? I have not
That's
seen
the
it.
last thing there, the last item before the requirements.
Okay, my sister. Thank you. Accounting profit is 350,000. Don't forget, what do we do to the depreciation of 7,000?
We add back.
On assets subject to investment relief. Then the capital allowance. What do we
Less.
do to the capital allowance on
Mhm.
assets subject to investment?
42,000.
How much is the capital allowance?
42,000.
42,000.
What do we do to the 42?
We less.
Just. Yeah. Simple go. Next. We go to,
Land.
what is the next thing? Land.
Land.
Go to the question, land. What is the current amount of the land?
200,000.
What was removed?
Tax base. Let's go to note 2. Land was revalued during the year, following the principles of IAS 16. The original cost of the land is 150. Land is not subject to depreciation under various or local tax law. So what is going to be the current amount of the land?
0.
Hey!
200,000.
Yes! Hey! Which
During the
principle are you using?
150,000.
It's Masabu. That man is joking. That Masabu. How do you say it is 150?
Because it's been
200.
revalued.
But we said we don't use revalue.
Oh, 150. Evaluation doesn't affect POL.
Was that straight? That is not the answer. Violation does not accept. The carry is the tax base we want to determine now. Is the tax base.
Tax base.
The
Still
person
one.
that said 150 has gotten it. Is the
Yes.
reason behind it.
Because of the original cost of the land.
And the reason
And
behind
tax
it
Doesn't
The reason
recognize
behind it,
evaluation as
the
well.
reason behind it can only be taken for the measurement principles.
Application
No way
of
again.
account with the knowledge of tax law to determine the tax bill.
That's all. Who use revaluation?
The accountant.
He bought asset 150 years, revalue it to 200. What will not be in the tax base or the tax people? Did you understand what is called evaluation?
Yes, sir.
A chassis. It's just what things for this table, before that table. Remember your measurement principles. It's 150. 50,000.
Sir, please, can you explain that again? Sorry, sir.
How much is the cost of the assets?
150.
A chassis. How much is the cost of the assets? It's
150.
They revalue it to
Yeah,
200.
correct.
Who use revaluation? IAS 16.
Accountants.
Accountants use revaluation surplus. Does tax people use revaluation surplus?
No.
Does tax people use revaluation surplus?
No.
No.
No. I say application of accounting principles together with your tax law to determine the tax base. That's all. I'll just come. 30% as 50,000.
15,000.
15,000. Deferred tax liability or deferred tax assets.
Liability.
Is it going to affect my POL now? What will happen to my current tax now? What will happen to my current tax now? Huh?
Nothing.
Nothing. Nothing. How? Why? I pick only accounting profits.
Has access to the
It's below it. You cannot use it for the computation of current tax because what you are pick is
financial.
accounting profit is above OCI.
Yeah.
Evaluation surplus cannot go to POL, it goes to OCI. Get the logic. Next.
Plants and equipment.
Plants and equipment. What happened to the plant and equipment? Plants and equipment. What is the carrying amount?
100,000.
The tax base?
90,000.
90,000.
There is this thing, no? A note to it.
I'll go and read the note now. Oh yeah, let's go to the note. The note. Balance in respect of the plant and equipment after allowing for the decision of 12,000. 10,000 for plant purpose. Why are they giving us that information?
To show how they arrived at 190.
They play.
Because depreciation was deducted from the cost of.
Well, because of what?
From the original cost.
The asset.
So why with what we have done this morning, this is the answer you'll be giving me. Why did they give me this information? That the balance in respect, after allowing for depreciation of 12,000.
It's for you to adjust, to include it in your current tax.
Overturn.
Yes.
Let's say what we have been doing. Why are you giving me this information when I've determined the carry amount and the tax base?
We add back the depreciation and
So that
let's
I'm going to use current as. He asked me for computation of current as. So depreciation. Depreciation on plant and equipment. How much depreciation on plant and equipment? 12,000.
12,000.
And we add back. On plant and equipment. How much is the capital allowance of plant and equipment?
10,000.
10,000.
That's all. That is all. That is all. Next. Has it created a temporary difference? Is it a different liability of Gibraltar's assets?
Liability.
Next. Trade receivable. How much is trade receivable? 73,000. Note as base. They've given me note. Note 4. Trade receivable balance given above is made up of the following. Opening balance 80. Allowance for doubtful debt 7,000. Closing balance 73. What will now be the tax base? Allowance and opening
80,000.
allowance.
80,000.
80,000.
80 minus 73.
7,000.
7,000.
That's all. 30% of this.
6,100.
Is it a Gibraltar's
2,100.
liability or Gibraltar's asset?
Assets.
1. I will now go to the current tax. Provision for that date. Provision. For
That's the add back.
how much is it? 7,000.
7,000.
Welcome. Next.
Interest receivables.
Plus receivable.
$1,000.
1,000. What is the tax base? Not
0.
It's too fast. How do you say 0? You people are
Is
too
on
fast.
cash basis.
It's only that one you people know well. Cash base is 0. 0. 1,000. 30% of 1,000.
400.
Huh?
300. 300.
300.
300.
300. Next. Now, next payables, we have fines. 10,000. Any note on fines? Interest, receivable, and payables are considered on cash basis. Are considered on cash basis. It's payables. 30% of 10,000.
3,000.
10,000.
Reverse assets. We'll go to the question. It's on cash basis. We have not done the two interest. Interest 1,000. Interest receivable. Of 1,000. It's on cash basis. When you receive the money, with us, the dots. Points on cash basis. When you pay the money, we come and talk. So on cash basis. The next,
What's payable?
I'll go to the interest payable.
Interest.
Interest payable.
3,300.
3,300. Don't forget the liability. Cash basis. 3,300. You see a deferred tax liability or deferred tax assets?
Assets.
Asset of how much now?
990.
As well. That is the end. What happened? My current computation of current tax.
We did that. No, you had.
Right. How much is the figure?
3.
Twice is on cash basis. An interest payable on cash basis. They've not even paid the money, but we add back. Any other one? As I'm finishing it like this, as I'm finishing this one, I'm also finishing this. So come here. Give me a figure. $10,500 plus 15 plus 3,000 plus 300.
$28,800.
28,800. Asset income.
6,090 naira.
28,800. 6,090. So the requirement, one of the requirements that say I should calculate deferred tax provision at the end. I would say 28,800, 6,090. 28,800.
Now they gave us balance of deferred. Okay, we are not using it here. Sorry.
I'm not sorry.
Sir, is it also the same thing as movement in deferred tax? I mean, this deferred tax provision is also the same thing as movement in deferred tax to pay on the
Who can answer the question? Who can answer the question in the class?
Yes.
No,
Who can answer the question?
it's not the same.
It's not the same. Oh. It's not the same. Oh.
It's not the same.
Closing balance at the end. Movement in deferred tax. What goes to the POL? What goes to the POL? Which we are going to do now. 28,800. These are the end. Balance provision at the end. 20,800 minus 690. What does it give us?
22,710.
I'll go to the question. One that goes to the POL. Movement in dividends.
Yes, opening.
Opening balance. And the closing. 22,000. What do we call it?
710.
710. Did they give me the opening balance of the dividends?
Yes,
Yeah,
sir.
What is the opening?
3,600.
3,600. Charge.
Dividends charge. Of how much now?
19,110. 110.
Yeah.
That's expense now. Dividends charge. 90,110. It will remain current tax. Yeah. For the current tax, give us the figure. The current tax. For the current tax.
336, 300.
336, 300. 336, 300. Come here. Taxable profit. Tax rate. Current tax. 30% of that 336, 300.
100, 890. $120,000.
They asked me to present it. Presentation. I will now say extracted statements of profits or loss for the year ended 31st December 2016. Tax expense 120,000. Extracted statements of financial position as at 31st December
Over the OCI.
current liability current tax no current liability Deferred tax. What is the deferred tax at the end?
19,110.
That is the movement too. Abi? 22.17. Awesome. That is all.
So,
Any issue?
yes, sir. I just want to understand what was mentioned in the question that led us to calculating this extracted statement of PLL.
It does not tell us anything to do with that. I'm
So
not saying
why did we? Yeah.
in case they ask you to present it.
Okay. Okay.
How do we present in the statement of financial position, which we have done before?
Okay. Thank you, sir.
So I can ask you to present it. Where do we post it to in statement of financial position? I'll do the presentation.
Hello, sir.
Hello, ma'am.
On the solution material, on depreciation, we have 19,000, but here so recorded as 7,000.
What have you an error? Depreciation. Assets subject to investment review, 7,000. Which one do we add as? First one. Is 7,000 is the first one now. 10% of 70. Which one are you talking about?
Yes, it's the one I'm talking about, but on the material, it's written 19,000.
19,000.
On the
Let's do
solution
19,000.
material.
Oh, I saw the depreciation together. We had depreciation of assets subject to investment relief, 7,000. I also have depreciation
On
of
that
plant
food.
and equipment. Can you see that? So also the capital allowance, 42 plus 10,000, 52. Is it clear now? Hello?
No, sir. No, sir. No, sir.
We have two assets there. We have two assets. Look where you will see.
Okay.
Have you seen it?
Yes, sir.
One is 7,000, one is 12,000.
Yes, sir.
So addition of the total depreciation that will be added back. 12 plus 7.
It's 19.
That's why you have 19.
Okay.
Hello, sir.
Mm-hmm.
So I said because interest payable is on cash basis, that's why we added back. So basically,
Yes.
is it that if it's not on cash basis, do we deduct?
It will not create, yes, now, because they will have deduct already. If they pay the money or not, they will have deduct.
Okay.
Because finance cost is an expense to the POL. You are still going to do it in your published accounts.
So in that case, the carrying amount will be equal to the tax base.
In which case?
Like when the interest payable has
It's
been
not
paid
attached.
already. It was part of what was used to get your accounting profit. So the tax base now be put to the carrying amount.
I did not get that question.
Now I'm saying that in the case where interest payable, let's say it was not on cash base, it
As
was
interest has been paid.
yes, it was paid and it was used in getting accounting profit.
What will now happen
So,
to the table?
so I'm just saying the tax base now should be equal to the carrying amount.
That means you people are not getting the basis with this question. Now, let me ask you why I said so. Does it create temporary difference? Will it create a temporary difference?
No.
No.
Really? You have paid. Normally, interest should go to POL. Only because as an interest payable, it's a reduction. It's a liable expenses. The only problem is that you are paying it now when you have not, you are deducting it now when you have not paid. That should not bring what we have been doing all these days on different tasks is the timing difference, temporary difference. You know now, they've suffered it now. They've suffered the money now. You have removed the money, interest receivable. We have added back because we have not collected.
Added back, yes.
When we have added back, it will increase our tax liability.
Yes.
But when we receive the money, I say, have you forgotten? Have you not tax? They will not tax it again. We will enjoy it.
So the tax base, what will we now put there?
That's what I'm explaining. That we are not getting. Will it create a temporary difference?
No.
No. They will not even mention something like that again. Because the interest, the highest they can do. Let me show you the one, what they can do. Yes. That I used to see can do. Is the one I told you in your. Are you seeing? The highest they can go. If everything is not paid, is what we can say part is not paid. But if all has been paid, no temporary difference now.
No.
Look at this. Look at this question now. Let me show you this question.
Yeah, that's what I'm saying now. There won't be temporary difference. That means
It
your
will not
tax
be.
rate will be equal to your
The tax
carrying
rate is
amount.
the carrying amount. Okay,
You will
so
not
making
even,
it zero.
it does not create, it will not come to the table at all. That's what I'm
Okay.
telling you. It will not come to the table. They will not give you something like that.
Okay.
Let me show you. Because it will not create a temporary difference at all. Look at this one. On June 2022, Salami Limited had a credit balance of different as account of this. Or in respect of the decision, different between decision and capital allowance. Good. During the year that the following transaction took place. One, Fortune was charged against profit in respect of the decision, and tax compensation showed a capital allowance of 50 million. Interest receivable of 50 million was reflected in the profits for the period. However, only 45 of interest was actually received during the year. Interest is not taxed until it is received cash basis. If the only 50 has been received, ignore. It will not create a temporary difference. What about you taking it to the table? They say, okay, oh, for this one, what is the carrying amount? 50. What is going to be the tax rate? 45. 5,000 difference will now be what? When it is received cash basis.
Yeah.
This is a track they can also go. That's why I'm giving you different ways this thing can come. Look at this one. Interest payable was treated as an expense for the period. However, only 28 of the interest was actually paid during the year. It will create a temporary difference.
Yeah.
It will surely create a temporary difference. Interest allowed for on his paid cash basis. What will now be the carrying amount? 32. What will be the tax rate? 28. 4,000 will create the temporary difference because if they say the 32 has been paid, how can they cause a temporary difference?
Don't be temporary difference, yeah.
We ignore. With this one now. And this is 50 marks. But doing nothing. Any other question before we go to the next? Papa send it to the platform.
No, sir.
No.
Which one?
This one.
Which one? This one?
The last
Like
one,
this, the question we just solved.
Are you
you've
sure
not
it's not
saved it.
It's there already.
ABC, this is ABC now. It's here. We make any. Next question. Which one do you want? Do you still want this kind of this one?
Are we solving another question?
Good night, sir.
Which of your night? Which of your night?
Oh, God.
Which of your night?
Our night.
Go to question. When do we supposed to stop?
11.
Is it 11:30?
11 o'clock.
4 o'clock, sir.
You must finish your money.
With that,
we are okay. We are okay with the one we have used for tonight.
You can keep the change.
No.
Hold the rest, sir. No problem.
If it is only if all of you go, it's only me. I'll be solving. I'll be asking myself. We'll send to the platform. We'll send to the platform. Go to question 25. Question 25.
Night light. So I think we have solved this one now.
25?
Yes.
Go to 26. It's 26 I want to say.
There's no
Bessie.
26.
There is 26. Bessie and red grape.
There's no 26.
There's no 26.
Yes,
no 26.
sir.
Why now? Okay.
So let's do money live.
Go to 20. 20. 20.
This one.
20. This one.
No 20 again.
There's 20. Wow.
They play. You must learn. They play. You will learn. 20. Differentiate between taxable difference and differentiate between taxable difference and deductible difference. You know taxable difference, it will lead to what? Deferred tax liability. It occurs when the carry amount of an item is greater than the tax base. And deductible difference, then the B part of the question. You will now go to the B part of the question. If you like, John, look at me. I say, you must finish your money.
Cousin, sorry, what is deductible difference here? What is deductible difference, sir?
The total difference now will lead to deferred tax asset. It occurs when the carrying amount is lesser than the trust base.
Okay. Thank you.
They're just asking obviously to create this default tax table. That's it, sir.
They don't say you should create deferred tax table.
I thought that's where we get the temporary difference and the this
For
thing.
which one are you talking? Is it for this question you want to solve?
Yes, this
Question 20.
question. Yes.
Look at me. So you want to solve now. So you are with me. You are with me. Are you not
Yes,
with
sir.
me?
You might
I
sleep
trust
along
you.
the line.
You might do what?
You might sleep along the line.
No sleep, my sister. Don't sleep. Don't sleep.
Hey, God.
No, I don't just tired. I
Let's
just
go to the
demand.
question. The question says, calculate the taxable profit. Assurance. You must finish your money.
You don't finish.
Okay, there is office tomorrow.
How does that relate to ICANN lecture? How does that relate to ICANN question? How does that relate to ICANN question? Office and ICANN. How? The question says that to calculate the taxable profit. He has given me 2009 to 2010. Don't forget to calculate taxable profit. It did not say I should calculate current tax. Please, I know this person. I will now say computation. Taxable profits.
So which board are you writing on?
Are you not seeing my board?
We are seeing the old one. No.
Try sleeping. He's writing on a notebook.
You can see it now.
Don't forget, he has given me account. Don't forget to calculate taxable profits. I know the rules. Question, please. You will want to frustrate me. I cannot be frustrated. Question 20. Question 20. Question 20. Question 20.
We don't need, sir.
Taxable profit comes out as a for the 4 years.
I'm not seeing the board. Okay.
Are you all not seeing the board?
I can see the board now. I can see it.
But I don't see it. May I see the board?
Please on mute, so you're not on mute. We can't hear you, boss.
You can't hear me, Ken.
Well,
You cannot hear me.
You can hear you, sir.
Can you see the board?
No,
Yes.
Yeah.
Okay. I will now say year 2009, 2010, 2011, 2012. Accounting profits. What is accounting profit? 900, 2011,
950.
950,
850.
then 850.
Depreciation.
Now, the question says assurance purchase equipment. Okay, now. Purchase equipment. What is the cost of the equipment?
4 million.
4 million.
4.
4 million.
And depreciation rate is how many? 25%.
25%.
So yearly depreciation will be 25% times 4
4
million,
years.
which is 1 million.
Yeah, yes.
Divided by
The
4.
capital allowance. The capital allowance granted 40% of the cost of for 2009. 0.4 times 1 million.
You mean
0.4
1
times
million, I'll be 4 million.
1 million. Thank you. What is it given for 2010? 30%, 0.3 times 1 million. For 2011, 0.2 times 4 million. For 2012, 0.1 times 4 million. Oh yeah.
The first one is
1.6.
1.6 million.
1.6 million.
1.2
1.2.
million.
800.
800,000. 400,000.
400,000.
I will go to the question. And I say, he has given me accounting profits, add back, depreciation, which is 1 million.
1.6. That's
1 million.
oh, depreciation.
Okay, yes.
1 million. The capital allowance.
1.6.
1.6. The first year.
1.2.
800.
800,000.
Yes, 800,000.
400,000.
This will give me taxable profits. Requirement of the question. Taxable profits. This will give me taxable profits. Now, temporary difference. This will give me yeah.
200,000.
Yeah, 200,000.
Yes. 700,000 for the next one. So it's not 2 million, no, 200,000.
700.
1,150,000.
150.
It's just 150. Eh? It's 150.
1,150,000.
1,150,000.
Yeah.
1,450,000.
This is the first requirement. The second requirement is calculate what? Temporary
difference.
I can use two methods to do that, to calculate my temporary difference. It does not say I calculate current tax. So A is soft. Say taxable profit. My temporary difference now, I can use deferred tax table. So by saying year. Carrying amount. Tax base. Temporary difference. Tax rate. Deferred tax liability. Deferred tax assets. First year, which is 2009. At the beginning, we buy an asset. Cost 4 million. Tax base 4 million. Then we charge depreciation by capital allowance. Depreciation of 1 million. Capital allowance of 1.6. What does it give us? This will give us 3 million.
2.4.
Has it created a difference? Yes.
Yes.
600,000.
600,000. Tax rate.
30%.
Is it a deferred tax liability or deferred
Liability. 180,000.
180,000? So the deferred tax at the end is 180. In 2010, the closing balance will be the opening. We charge depreciation again. Depreciation / capital allowance, 1 million.
1.2.
This will give you
2
2 million.
million.
This one will give you
1.2.
1.2.
800.
240.
Then 2011, depreciation, capital allowance.
$800.
800. 1 million. 400,000.
Secret a temporary difference.
Yes,
Yes.
600,000. 600,000.
180.
Asset or liability.
Is that a liability?
Liability.
180,000.
2012.
Everything down to 0.
400.
So, deferred tax here, 2009, 2010, 2011, and 2012. SFP. What is the first one? 180. 180.
240. 240.
240.
Yes, sir. $180. 0.
POL. You must finish your money. Okay. We don't know when we are going to close.
Mama's school.
Oh, yeah. 2009, 2010, 2011, 2012. Open. Balance. Closing. Balance. The opening balance is 2009. Nothing. Did not give. 180. Is that not?
Yes.
Charge.
180.
180.
No, 240.
240.
It's 240. So, what is the charge now?
60.
60.
Good. Getting it. No, we don't reduce so we don't go 60. This will not give me 240.
240.
What do you close here?
180.
180.
Charge your credits.
Credits. So 0, 180.
180.
0,
Charge of how much?
180.
180.
Credit of 180, not charge. You can see. Or I can decide to go to another route before we go to the last question.
Ah,
Mm-hmm.
so I will still go to another question. Good.
You send the solution to us.
Just
So this is after 11, no.
This after what?
After 11.
They play. Temporary difference. Tax rate. You see a charge / credit. Year 2009. Depreciation of 1 million was charged. That allowance of what?
1.6.
1.6.
600,000 in this difference.
Yeah,
You
30%.
see a charge or credit?
It's a charge.
Charge.
The charge, yes. Charge.
How much now?
180.
That is what you first of all get this 180 charge.
Okay.
First of all, get that 180 charge. Then secondly, 2010. 1 million was charged.
4.2.
4.2.
Yes.
800.
200.
800.
200. 200.
200. Yeah. 60.
60,000.
60,000.
Charge, Abby.
Yes.
Yes.
2011. 1 million.
800.
800,000.
What does it give you?
200.
200.
60,000.
Is it
60.
charge or credit?
Credit.
Credit.
Oh.
So we have 180 charge.
For the last one, which is 2012. $1 million.
400. 600.
600.
Is there a charge of
180. Credits.
The credit.
how much?
180.
180.
So I can use this one
Zero.
to the other approach. If I now use this one, how do I get the closing balance in the statement of financial position? The same thing here.
Sorry, sir. Why is it credit?
Because the depreciation
The
is greater
depreciation
than
is
capital allowance.
Capital
Based
allowance.
on the principles I've given you.
There's an income.
Yes. Yes. No concern me. After this one, we'll move to the next one. So it's 2009.
They play.
They play. You will learn in that way. You will learn in that way.
Why tonight?
You will learn.
Eh?
It's tomorrow exam.
If tomorrow is exam, you cannot sleep with that. If tomorrow is exam, you cannot sleep at all. What is the opening balance? Name. There is a charge for the year.
Why?
You see the table. You are using this table. What is the charge? 180. Abi?
Yeah.
Yes.
180. 0 plus 180 will not give me 180. 180 will not be the
Opening
balance.
What is the charge for the year?
60.
50.
180 plus 60 will not give us what?
240.
240, which is opening for next year.
But we did not have charge. What do we have?
We had
Credit.
credits of 60.
16.
You give
What is that
180.
going to do?
180 back.
Then 180 now be here.
180 is opening. 180.
But we have a credit of what?
180. Give you 0. Damn.
So we can have my deferred tax account. The one is statement of financial position. The one that goes to the POL for the 4 years. So, ladies and gentlemen, I really appreciate your extra efforts. God will grant our efforts.
Amen. Thank you
This-
very much, sir.
This, so you can go through other ones and somebody says here, please see this here and this night again. I've sent 2 assignments. You can lay your hand on it.
I'll finish my money.
Who is that one?
Somebody say, what does he want to know?
I want to finish my money. I have a question.
Well, you have finished your money. Ask a question. Or we should do another question.
Yes, please. Please, yeah, that depreciation, the one now, can you scroll up, please?
Huh?
Can you scroll up? The table
Okay,
will just.
let me set your platform first.
Okay, good.
So that I will not forget. You know, the depreciation, they said they bought an asset for 4 million. And 1 million was charged.
It's just, what I'm saying is that if you have 60 credits,
Okay.
twice.
So long. Which are you saying?
Okay. Okay. Okay, I'm good. Thank you.
Okay, no problem. So, by God grace, see you. When are we meeting again?
On
So
Thursday.
we are going to another topic. Now, I think we should.
Now, what you sent us is not correct. It's not the question we just finished. You sent.
I'm saying the one we just finished now.
Okay.
Are you not seeing it? Is the one now?
Yeah, we can see it now.
I'll send out your question. So when we will next we meet, we start earnings per share. Then we go to cash flow. After cash flow, then group accounts. By God's grace, before you know it, we are done. So have a wonderful night rest.
So please, on the group, some posted IS1 something. Are you not taking it?
Now we go take everything. Maybe two people will be. I'm not the one taking it too. It's Mr. Wasim is taking as S1.
Okay, thank you.
And I think he has finished with that. I don't know anyway.
IS1.
I'm not sure.
No, we have not started.
We've not started.
So that is all.
Think
Thank you, sir.
finish it on
Thank
Saturday.
you, sir, and good night.
Good night. Thank you, sir.
Thank you.
Good night.